hello, everybody. Happy Wednesday. Happy hump day. Yes, 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 yes. Mike. Here we are. I'm going to apologize ahead of time if you see me squirming around a little bit here. It is because I have my leg elevated on this ice machine for my knee. But nonetheless, we are going to get right into it. Yesterday, someone had asked on Market Minds, can we talk about the midterm elections? I said, sure. And I thought we were going to do it Thursday, but we are going to do it today. So smash away, like, subscribe, and everybody can hear me, right? Because I have a very important disclaimer before we start. So I just want to make sure everybody can hear me loud and clear. Okay. Awesome. Okay. This is typically a political safe free zone. Okay. We're going to keep it that way. Yes, we do have to sometimes talk about how politics affect the market. Okay. So that is something that we do need to talk about. Each and every one of us have different viewpoints on how things should be run. This is not the forum for that. Okay? What I'm going to talk about today has nothing to do with policy. Just has to do with what happens during midterms, what can we expect? So I'm going to ask very, very politely of everyone here not to make any political comments that might be on the edge at all, because that's not what this is for. All right, I know we're all adults. I'm hopeful that we can all adhere to that. And this won't be the last time we talk about something political that affects the markets. All right. Let's see. Trading then. What did you say there? That's a nice long explanation there. All right. Well, let's do it, everybody. Whoops. There we go. Let's do it. So, yes, elections are part of market psychology, part of our P&Ls. There is no question about that. And midterm elections typically can be more volatile than the regular every 4-year elections. So, how do midterm elections affect the stock market and why? Okay, so for this century, over the last 20 years or so, we have seen January and February of midterm elections, okay, not necessarily so great. Okay, usually Jan and Feb are pretty good months, especially January, but we've seen average gains of 0.3 and 0.2% respectively. Okay, and why is that? What is, and we're going to talk about this for the next 10 months, 11 months, whatever it is, right? It is uncertainty. The market typically does not like uncertainty of any kind. Okay? Also, going back 75 years to 1950, the years of midterm elections typically have a lower overall average return in the S&P. Okay? But don't fret yet. Okay, yesterday we just talked about how, we're in a 3-year bull market with the S&P potentially up 15% a year, 3 consecutive years, and that could be a good thing moving forward into 2026. Now, around midterms and leading up to midterms, we have typically seen fairly large drawdowns in the S&P a year, 18 months prior to those midterm elections. What is a large drawdown? 5% to 10%. Okay. And after the election, these drawdowns have proven to be a really good buying opportunity, as Kevin just said. Okay. After the midterm elections, equities perform really well over in short term and longer term. The next 3, 6, 12 months. I'm going to show you some data here coming up here, which shows that over the last 90 years, markets do act differently during midterm election years. Okay. And again, why is that? It is uncertainty. It is uncertainty. We can see more gridlock. We can see slower growth. But after the event, just like we talk about after an earnings event, after a big economic data point comes out, what happens? We get back to normalcy. Focus on the fundamentals. Same thing here. Okay. Now, again, this is not political. This is just factual. Doesn't matter Democrat, Republican. There is something known as the midterm curse. Okay? Historically, midterm elections don't go well for the president. The president's party typically loses seats in Congress, most notably in the House, which would make sense, right? There's 8.5, almost 9 times as many, or I'm sorry, 4.5 times as many House seats, as there are in the Senate. This trend is known as the midterm curse. Why does it happen? Well, any number of reasons. Voter fatigue, strong turnout from the opposition, unpopular policies. That is the trend. Now, this one might be hard to see for you, and I will post this up. We will, in fact, I will get a link here, and I'll make sure this gets out to everyone. Okay? So, in the last 100 years, we have had 25 midterm elections. 9 of those 25, 36%, have come right outside a year on either side of a recession. Okay? So we are going to exclude that in the data here. On the other 16, 12 of those, so this is where we were just talking about, were preceded by a pullback of 10% or more in the S&P 500 within a year leading up to Election Day. Okay, the others saw pullbacks of less than 10%. 7, okay, were 20% or larger. 5 were between 10 and 20. Okay, but what this goes to show here, again, this is historical data. It is not focusing on red or blue, Democrat or Republican. It is just the data of what has happened. And what it shows is there could be some good times ahead. Maybe a little trickiness, maybe a little pain going into the elections, but then good times ahead. As Kevin said earlier, this can be a really big opportunity. Okay, why is that? Okay, these pullbacks were typically really good buying opportunities with strong average S&P 500 returns after the midterms. Okay, check out some of these stats here. Check out some of these stats here. On average, after 3 months, so yes, midterm, the elections are in November, so that includes December, Santa Claus rally, January effect, blah, 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 blah. But on average, 3 months after, we see the S&P up almost 6%, up 10.5% after 6 months, and just about 15% after a year. which is kind of right where we're sitting right now, the larger the drawdown pre-election, the larger the 12-month rally has been after the election. And what we typically do see, which someone had mentioned in the comments here just a few minutes ago, don't care what happens, we just want to see that volatility. The volatility in the markets before the midterms is likely to be a key buying opportunity if and when it happens in the next 12 months. We typically do see higher volatility. In fact, yesterday I referenced that I had just written an article for the CME on this exact topic. Sorry, as I adjust this big wrap around my knee. Part of what I was writing about, part of what I talked about was the uptick in volatility. Okay, so in addition to the change in equity performance, midterm election years are historically the most volatile of the 4-year cycle. That is a great thing for us. That is a great thing. Why? Well, nobody really knows why, other than investor uncertainty. Right? It seems like it really comes down to the psychological part of trading. Right? Just like it does around another announcement where we don't know what's going to happen. Just like, and I use this analogy all the time, so if you've heard it from me before, I apologize. You're driving down the road and then all of a sudden you see those police lights, the sirens right behind you. How does that make you feel? How does that make you feel? Well, all of a sudden, right, you tense up. Maybe get that little wave in your stomach because, oh no, something just happened that's out of my control. Something just happened that is not the norm, right? That's the same thing that the market feels going into an event. That is why we see implied volatility, option volatility increase into an event. Hang on. Let's get our word of the day. Let's get little Lou up here for a moment. Shows during the election cycle, okay, 4-year election cycle. Where do we see the highest volatility? There it is. There it is. Now, does that mean you go run out right now and say, oh man, I'm going to go buy some September, October, or next year VIX upside calls? No, you don't want to do that. You don't want to do that because there will be plenty of opportunity to do that. Plenty of pockets of times when volatility is not big. Does this also mean just because volatility is increased that the market is going down? No, it doesn't mean that either. What it does is it just shows us that things get more expensive because of the uncertainty, which again, that is a great thing for us. Okay, now this one shows the average S&P return of all years during an election cycle. The blue there are the 3 non-midterm years. The orange is the midterm. So sure, you can see there is a marked difference. There is a marked difference. Okay, so longer term investing plans, maybe you change that up a little bit. For our short-term trading, probably not going to change a thing until we actually start seeing some patterns unfold. And if 2025 is a precursor, if it's anything similar to what 2026 may be in terms of following history, we're probably in for some surprises. Maybe we do or don't get the January effect. Maybe this year, like we saw, buying, sell in May and go away. If you did that, you got your you-know-what handed to you. So there are certain to be some peaks and valleys in 2026. Maybe some are directly related to the midterms. Maybe some aren't. One thing that is for certain is volatility will be there. It will remain elevated. Again, what does remain elevated mean? Doesn't mean we're going to see a VIX of 20 plus all year long. That's not going to happen. But people will be on edge a bit more than normal. All right, let me go back to Lou here for a second. Okay. Does everybody know have you guys all heard about this guy right here, Scott Redler? He's a pretty well-known, very, very respected, highly followed trader / guru / whatever you want to call him in the marketplace. He's on the major networks all the time like I am. In fact, here's the two of us together on an interview with Liz Clayman. How many of you know who Scott Redler is? His social media handle is Red Dog. Okay. I'm doing a webinar with Scott Redler today. I am doing a webinar with Scott Redler today, right after the market closes at 3:30. Okay, we're going to be bouncing ideas off of one another, talking about how we trade differently, how we trade the same, some of his strategies. Okay, today, right after the market closes, so 3:30 Central Time, 4:30 Eastern. I think we just posted a link up there. If anybody is interested in listening in to me and Scott Redler, Liz Clayman likes to call us when we're on together the Great Scots. I'd rather just be good. But Alpha Team, there we go. There we go. All right. Think we got our, is the wheel closed, Mike? For those of you that are in my opt-vol room, okay, I went through a long discussion today on our NOW position, which during the early morning today, we had a lot of iterations about how we wanted to attack our position, how we wanted to change it. John, if you sign up for the Webby, you'll get a recording sent to you. So going back to the NOW, this morning was an example of the market in a particular stock, not necessarily overall, but in a particular stock, really moving around quickly, volatility changing quickly, which led us to changing how we reacted to our position. Those that were in the room listening in real time while we were doing that, no problem. We were talking through it. Those of you that maybe weren't in the room, had the position on, and saw multiple signals of what we were going to do, my apologies if there was confusion, if it was frustrating. It was all in the best interest of maximizing our position. All right, our wheel is ready. Whoa, love the colors here. Mike Clark. Mike Clark, nicely done. I think we may have to keep these colors through the end of the year. What do we think? At least that wreath in the middle. That's awesome. All right, here we go, everybody. Mike Cook, Mr. JHNAV. Who do we have? Mike Cook, are you in the house? Mike Cook, are you in the house? Got lots of congrats for Mike. There we go. Yes. Mike is in the house. Wonderful. Wonderful, wonderful. All right, everybody. That is our look at midterm elections. And again, if anybody would like to join myself and Scott Redler after the close of the market today, the link is up there. Just click on that link, sign up, you'll be in. Appreciate all of you. Thank you, everybody. Love the suggestions. Again, today's topic was because of what you guys suggested yesterday. So thank you very much. Oh, Dorothy, what I like that. Dorothy with the emojis there. Look at that. All right. Thank you, everybody. Have a fantastic day. We'll see you all tomorrow.